Economists are trying to gauge what impact the Ukraine war will have on the U.S. economy and on inflation to figure out which force the Fed needs to confront right now, price pressures or slowing growth. Steve Leisman joins us with a CNBC Rapid Update. Steve?
Yeah, how about both, Kelly? That first pass, highly contingent on what happens with oil prices, shows the U.S. will grow more slowly with higher inflation. Europe's economy could flirt near recession, and Russia will plunge into a deep double-digit decline. The CNBC Rapid Update showing U.S. growth accelerating. Still, they're banking on this to 3.5% in the second quarter from an estimate of 1.9 in the first as the U.S. recovers from the Omicron slowdown. But the second quarter estimate, it is down by 0.8 percentage points from our survey in February. Second half outlook also fell, and the full year GDP dropping by a modest 0.3 percentage points, still at 3.2% above trend. Forecasters caution, though, with oil prices surging to $117 a barrel, risks to their estimates are all tilted to the downside. J.P. Morgan, in fact, writing the consequences of a complete shutoff of Russia's 4.3 million barrels per day of oil exports to the U.S. and Europe would be dramatic. The CNBC Rapid Update finding economists marking up their inflation outlook for PCE inflation by 1.7 percentage points this quarter. It's a 5.3 at an annual rate, building in a slower decline than previously thought. And finally, for Europe, both JP Morgan and Barclays reducing growth by about a percentage point each one, with JP Morgan penciling in 0 for euro area growth this quarter, but 3.2% for the full year. So they're kind of counting on this going away. Not for Russia, though. The Institute for International Finance says Russian growth will drop by 15%, double the drop in the great financial crisis in Russia. Kelly?
Wow, that is a huge hit. What about the ruble, Steve? It's continuing to fall before our eyes.
Yeah, free fall here, Kelly, for sure. What you see here is a quote right now of 146, but I'm seeing actual quotes out there quite a bit. Now, what's interesting about the trade today, if you look at the line, look to the left and see the other days and those declines that happened during the day. That would appear to indicate, from my old days in Russia, the central bank perhaps coming in. But that straight up line today kind of tells me maybe they didn't. Although right now it looks like maybe they did 134. It just dropped too hard to know. But it looks like overall the Russian central bank is allowing the ruble to fall. And we don't know what would happen, Kelly, if the Russian stock market opened, creating that massive demand that would happen for for U.S. dollars once the Russian stock market opens. It is still closed.
Shepard Smith here. Thanks for watching CNBC on YouTube.